The Parabolic SAR is responsible for stealing the souls of many a trader, especially beginning traders. We here at No Nonsense Forex do not endorse the use of this indicator. However, so I've got quite a few questions about why have I never made a video for the Parabolic SAR, and why have I never even really mentioned Parabolic SAR anywhere in any video so far. And I don't have a very clear answer. I mean, look, I don't like this indicator, but if you guys remember the Dirty Dozen video, it's one of the most popular videos on this channel, it didn't make the cut as far as the 12 most egregious, flagrantly bad tools that you can use in Forex trading. It was just a little bit outside of that, because unlike the tools in the Dirty Dozen video, I think there is a way for some people to profit by using this thing. I don't think it's very probable that it's going to happen, but I do think there's a way. So in this video, we're going to talk about just a little bit about what it actually does and what it is, and then why so many people, especially beginning traders, just flock to this thing right away, because there is a clear reason for that, I think. And then we're going to talk about the problems it has, because it certainly does, and one solution that I don't use myself, but you guys trade different systems than I do, and a lot of you are a lot smarter than I am, and you may find a good use for it. I will just point you in the direction that you're going to want to go when testing this thing out to really maximize its potential, whatever potential it actually has. If it's there, I really think there's only one way to go with this thing, and we'll talk about it. And during this video, I'm going to reference a lot of other videos that I do. I'm not going to link them all down below in the description, but that's going to be for you to go find. If I ever do reference another video, they are so easy to go find if you want to. You just go within my channel and run a search, or you can just type in on YouTube, for example, No Nonsense Forex Risk Video, or No Nonsense Forex Ichimoku. Super easy. I've done over 100 videos so far if you include the podcast episodes, but if you're looking for anything in particular, it really shouldn't be hard to find. But just know that ahead of time, there will be quite a few references in this particular video, even as short as I think it's going to be. But let's go ahead and get into it now. So the Parabolic SAR, you guys have pretty much all seen it before. For some reason you haven't. There are a bunch of dots on your chart, and when those dots change from being over the bars or candles, over where price is, and all of a sudden they flip underneath them, as soon as it does, that is your signal to enter a long trade. So conversely, when those dots are below price and then all of a sudden they flip above it, that is your signal to go short. It is super easy. And it is also a main reason why I think beginning traders like it so much. All right, now you got to put yourself back in the mindset of a trader who has never seen anything like this before. You had your other basic indicators, like your stochastic, like even easier than that, the RSI. It's pretty obvious what they did, but there was still a little bit of room for interpretation on those indicators. To our Parabolic SAR, there is not. It is very binary. When this happens, you do this. When this happens, you do that, and it is super easy to see, and brand new traders love it, especially when they see a chart of it for the first time, and it, at least on the surface, looks like it works tremendously. We'll go to my charts in a little bit, but before we do that, remember this as well. The Parabolic SAR is a reversal indicator. It was designed that way, and we all know, for those of you who are brand new to the channel or you haven't seen the reversal or trend video that I've done, we are not reversal traders here at No Nonsense Forex. We are trend traders. In spot Forex, we do not have much use for any reversal indicators out there, especially something that goes so far as to call itself a reversal indicator. And Parabolic SAR does. So if you guys didn't know, the SAR in Parabolic SAR actually stands for stop and reverse. I mean, reverse is in the name. That's how much of a reversal indicator this thing was intended to be. So if you are aware of that as a beginning trader, you are double screwed, because not only are you getting cozy with a subpar indicator, you have no money management, you have no structure in place, and you're going to need one for this thing because it does not do its own job super well, especially the job it is supposed to do, which is called reversals. Let's go to the charts. So here we are, as always, on the Euro-Dollar daily chart. And we're not always on it. If I have to, absolutely have to, put you on another chart just to show a better example, I will. But for the most part, we like to keep it consistent. So we go to the most heavily traded pair on the planet, even though it's one of the worst pairs to trade. We still go with it. And we use the daily chart because that's what we do here. So let's take a look at this. So I got the Parabolic SAR up. And honestly, one of those things, it does a pretty good job in this particular example overall. What I did is I measured by using the money management system that we use. This part of it can be shown in the scaling out video, to where if price can hit the ATR of the candle of which we entered. So if we enter right here, for example, this short, and the ATR was at 60 pips. If this thing goes 60 pips or further, that's considered a win, because then we immediately put our stop loss to break even, so there's no way we can lose that trade. All right. If for some reason price never got to that point, then I call it a loss. All right. So what I did is I took the 4 losses that you're going to see here. If we were doing nothing but using the Parabolic SAR for our entries. And again, this is pretty good. I mean, there are quite a bit of trading opportunities here. And to only have 4 losses amongst them is really good. This is one of those examples where the indicator I don't like is actually working really well. But we need to make sure that our number one goal in technical analysis is to eliminate losses. I say it all the time, we win by not losing. And a big reason I say that is because in any smart money management system where you are scaling out when you are winning, but you are not scaling out when you are losing, which is exactly the type of money management system I endorse, because you need to let trades retrace and breathe. You don't need to cut your losses as soon as trades start going the other way. When you have a money management system like that, you need to do everything you can to eliminate as many losses as possible. Here's why. I just gave you kind of a layman's version of this, but let's go ahead and draw this out because I don't think we've talked about this. This is a very unsexy and somewhat unfortunate part of having really smart risk management, but it just is what it is. Now, if for some reason after you enter a trade, it goes 200 pips in your favor, and that's as far as it goes. When you are back testing or when you're just testing out indicators and you see that, you're like, wow, that's a 200 pip move. I would have made 200 pips. No, you would not have. You wouldn't have even come close. With smart money management and scaling out at a certain point, you're really, in a trade that goes your favor and doesn't come back and hit your stop loss, you're only getting about half to 3/4 of the move. And if for some reason that thing shoots all the way back and hits your break-even stop loss, you're only getting half of what you scaled out for. You know, those aren't huge wins, or at least they're not as big as what you would normally think they would be when you're back testing and getting all excited about how well this indicator would have gotten you into this trade. You know, it's always a little bit of a come down. You know, that 600 pip move you just saw is not 600 pips in your pocket, and oftentimes not even close. But on the flip side, oftentimes, if something shoots the other way quickly to where your indicators can't catch up to it, a lot of times, and it might not be 200 pips, let's say it goes 80 pips in your direction, and that's where your stop loss was. You're losing all of that. You're not just losing a portion of it, because we don't scale out of losses here. So it's really, really important that you do everything you can to make sure, one, those losses don't even happen in the first place, And two, if they do, that hit that you take is not so bad. And we do that here. As unfortunate as all of this is, in the money management system we use, it has been almost singularly responsible for reversing the fortunes of no-nonsense Forex traders all across the globe. It is the #1 reason. As unsexy as it might seem on the surface, once adhered to and once plugged into your own trading, the results are tremendous and the results are instant. Not the technical analysis portion, the money management portion. Now, where does technical analysis fall into this whole thing? Right here. It is our goal, by using technical analysis, to get in at the best point we can, but also to make sure in that process that we are eliminating as many losses as humanly possible along the way. Now, I already have a euro-dollar daily chart set up with the Parabolic SAR already on it. And I also indicated the places where, if you would have just used the Parabolic SAR for trade entries, where you would have taken a loss. So let's go take a look. So the big question at this point is, if we're going to use Parabolic SAR, how can we use it to improve on this record right here? I don't have a great answer for that, but I have something that I think works pretty good, and it really is going to be up to you guys to see how well it actually works. So this is, as is almost always the case, a pretty choppy chart for a euro-dollar daily. But if you go to like dollar-yen, for example, something that trends a little more, you're going to see that this thing, as I said before, does a terrible job of calling reversals. And I mean, it's almost like it never met a real retracement that it didn't like. So when it tries to reverse, it often fails and fails pretty badly. But then right after it fails, in all of these instances, it seems to do a pretty good job of getting you back in to a trending trade. Which makes me turn to one concept in particular that we made an entire video about on this channel. And can anybody guess what that concept is? Do you all remember the continuation trades video? Let's just use the Parabolic SAR for continuation trades and nothing more. And when you have a nice trending pair like this, let's see what it would have done. I've actually already tried it on the euro-dollar, the charts I was showing you before, and there was only one opportunity because that thing really was choppy. It was 1 for 1, and you guys can go try it yourself when we do this. But I want to show you an example that gives you more examples of continuation trades, not just one, and I think we can get it here just by eyeballing it. So let's do one thing. We need to put a baseline on this guy because that's going to be the one way we will know if we have an actual continuation trade or not. If you remember the baseline video, obviously, but then the Ichimoku strategy video, we determined that the Kijun-sen was one of the best parts of that entire system, and we can use it as a baseline. So let us put that up. I think in that video, too, is where I showed you that I have an indicator that just isolates the Kijun. So let's get that up. And let's see what we have. Now, what we need to happen is something like this right here. For a short continuation trade, we need our indicator to flip long and then flip short again. I don't know why that happened. Flip short again before price crosses and closes above our baseline. That is the criteria for a continuation trade. And it happened right here. And it was certainly a winning trade. ATR of dollar-yen is very low almost all the time. Yeah, good trade there. And then it happened again here. It would have certainly hit our ATR at that point. Now, is there another one? There actually is. It's kind of weird, though. It's tough to see. Down here, price stayed below the baseline, so we're looking for short continuation trades. Parabolic SAR flipped positive and then flipped negative again on this really kind of weird candle, because even though it flipped short, you're entering on a pretty big bullish candle. So I don't think... I'm going to check. Guys, give me a second. I'll pull up the ATR to see if that would have been a win. It might have been. And it was not. That was a loss. So let's see how bad of a loss it would have been. As you guys know, as soon as price crosses the other way on the baseline, you are out of that trade no matter what. So, what did we lose? 10 pips. Not that big a deal. And you can go back on this thing and look at the other examples. You're going to see some more losses, but you're going to see some wins too, and you're going to see some pretty big wins. Continuation trades are great, and if you can find indicators that get you in them in the right spots, and when you do lose, they're not really bad losses, you have something good. And I think that's where this thing excels. I also tried this on the Euro-Dollar daily chart, but there was only one example to show you. It was a win, but that was all I could extract from it. So if you try this on other charts and you put in the work, I think if you insist on using the Parabolic SAR, you will find it work better as a continuation trade indicator exclusively than you will trying to use it in any other capacity. So in conclusion, I think the Parabolic SAR is actually better for trends than it is reversals, even though it was built for reversals because it's even in the name. But that being said, there's a lot better options out there if you're going to be a trend trader like us. I don't think Parabolic SAR is the direction you need to go. I think if you're going to do anything, it might actually have a chance as strictly a vehicle for finding those continuation trades. I put a lot of work into every indicator I test. I have tested this one a lot, and if you want to test it too, I think the best gift I can give you here is to save you some time and to tell you, hey, this is the one direction you need to probably go if you're going to find anything useful out of the Parabolic SAR. So I hope if there's anybody out there that can find some good positives out of it to where they can actually put it in their own algorithm, I mean, that's a pretty big feat, but if you can do it, I hope this video helped you out, at least in guiding you the right way. As to say, don't use it for classic trade entries. I made a blog for this as well, and we go over some examples that we didn't go over here on that blog. So if you want more, it's there. I'm going to link that down below in the description. But overall, the search for making it a really good continuation trade finder is where I think you need to be spending your time. So traders, I hope you liked the video. We have a lot of videos like this. If you're brand new to the channel, I am the one guy that says, hey, you know all those indicators that you know and love and everybody says are great? They're actually not. I'm going to show you why, and then I'm also going to show you where to find better ones. And even better than that, I'm going to spend a lot of time on things like money management and trade psychology, because if you can lock those down, it almost doesn't matter what indicator you use. You could probably even use the Parabolic SAR and still get results. You can just get better results by using better tools. So if you like the idea of all of that, subscribe, hit the bell, don't miss anything. I'll keep putting out these videos, but like I said before, it does take work testing these things out and optimizing them the best you can, and then going out and finding other tools that work even better. It is a process. It does take time. It does take work. But the pot of gold at the end of that rainbow is absolutely worth it. So go get it.